Hey, what's up guys? Today I'm going to talk about what is the best pair or instrument to trade on in the markets. So let's first analyze EURUSD. If it's a good pair, so we're looking for a pair that provides a setup, provides opportunity for us to trade on. So let's just start on EURUSD. I'm pretty sure you guys know that I only trade EURUSD because I'll explain later. But what do we see EURUSD doing? Overall in a bearish trend, as you can see, breaking structure here and structure here. So we're expecting still a push to the downside. So we see bearish market over here. So write out our lower highs, lower lows. Lower highs, we're expecting another lower low, which we did last night. Lower low. Now we're expecting another lower high and continue to the downside with a lower low. Now we look for a POI, which is this beautiful OP over here, followed by some imbalances in the inner side over here. We have some inefficiency. Then we look for confirmation in the lower time frames. Also, we can look for refinements, which we can see over here, that we see an order block over here which hasn't been mitigated. Technically, this OB got mitigated by this OB. This OB got mitigated by this OB. So technically right now, if we refine it, we still have this valid OB over here on the 30-minute, followed by an imbalance, followed by also this OB broke this structure, followed by an imbalance, which meaning it's a aggressive move to the downside. Now, when we then look for confirmation, again, we can refine. We can still have this overall zone marked up for reference in the future just in case price wants to go higher, because again, I can never predict the market. No one can, no one will ever will. That's why we risk manage. That's why we don't risk 100% of our account. Now again, we then look for confirmation on the inner side or on the inner lower time frames. We will look for a break of structure. As you can see, we see price tapped in again to the 50% of this OB over here, meaning possibly that this OB is now fully mitigated, because again, we believe that 50% of the order block is where most of the orders rely on. And as you can see, price tapped into that 50% of that OP. As soon as it tapped in, we see a break of structure over here. So you can see buying climax and ST, then a UT, which is a schematic one, Wyckoff accumulation distribution, my bad. As soon as it broke structure, then we can have an entry over here on this OB over here. Then we can enter it there. Again, this is hindsight. If you don't believe it, then backtest it or get away. Stop watching this. Then we can then target this lows over here, this previous lower low, because again, overall, we're expecting price to continue to push to the downside. Just basic lower highs and lower lows. So we're expecting a lower high somewhere here and continuation to the lower low. So EURUSD, check. We have a setup over there. Now let's check GBPUSD. If we see a setup over here, what do we see? GBPUSD, let's just go to the 4-hour time frame. GBPUSD has been in a bearish trend overall. As you can see, it broke this structural point over here, break of structure. As you can see, let me just draw out the structural points over here. Lower low, possibly lower high, another lower low. Then we're expecting a pullback. Either could pull back to either this region over here, because we will have order blocks on higher time frames, or it could just pull back to this region over here. This is a good idea now to pull out a Fibonacci retracement, because again, the 50% of the Fibonacci retracement is considered as a healthy pullback, then continue to the downside, or it could pull up to the 78% and continue to the downside. Let me just remove my drawings over here. Again, either price could tap into the 50% of the if this retracement, then continue to the downside, or 78%. As you can see, it's lining up with some OBs. The retracement is lining up with some OBs. As you can see, we have a refined OB over here. And we have another refined OB over here. And we can also see some overall OBs over here, overall OB, overall OB. Then again, we can look for confirmation in the more lower time frames. As you can see, price hasn't tapped into the overall OB, but we could expect price. It's possible that price could tap into this more refined OB, or it could just push down to the downside. And again, let's just use this larger zone for reference, since price just tapped it recently. As you can see, break of structure. Then we can enter on either this unmitigated OB or this unmitigated OB, which, as you can see, this one gets stopped out because no one is always a winner. But we can look for re-entries over here. As you can see, unmitigated OB over there, even the refined one over there. As you can see, also I see a Wyckoff accumulation distribution, my bad, buying climax, AR, UT, and a USAD, hence schematic 1 distribution. As you can see, it's the same thing. Let's make this wider. Go to the 4R again. It's the same thing with EU. We can target the lower lows over here because we're expecting price to continue to the downside. Because again, we are in a bearish trend either way. If you get stopped out on this setup over here or this POI, then we can look for another setup on this specific POI over here. Again, this is a 26.43 RR. It's up to you if you partial or trail your stop aggressively. But again, it's the same thing with EU on GU. Bearish market, we look for market structure, we look for POIs, then we look for confirmation, hence Wyckoff or just break of structure. Now let's go for GBPJPY. And what do we see GJ doing? As you can see, we're in a bullish move up to the upside now, because we have been breaking structure to the downside recently and fails to break the structure. Broke that structure, so we're expecting this to be another higher high. Then we're expecting a lower high, a higher low, and continuation to the other side with a higher high. So either we could wait, we can mark up some OBs over here, or we could mark up some OBs over here. We look for an area where price might react and push down. Why do we want price to push down? Because again, overall structure is we're expecting price higher high, and we're expecting a low, higher high, higher low, then we're expecting another higher high and higher low. It's just basic structure overall. So either way, we can look for confirmation in the innermost, in the lower time frame, to ride price to the downside, basically riding the retracement, and again ride it again to continue grabbing this liquidity high to fulfill another higher high, or just follow the order flow. Now again, it's the same thing with GBPUSD and EURUSD. We look for structure. What do we see structure doing? A bullish move to the upside. We look for POIs. Then we can wait for confirmation. If we look on the innermost structure, let's just refine this OB first. Either we can refine it, this larger OB or this overall OB. As you can see, and also refine this tinier OB over here. Either price could bounce from that point or bounce from the larger point, bounce from the red point or the larger point. We can go to the 5-minute. As you can see, as soon as price tapped into the innermost structure again, tapped into structure again, then let's just measure this overall OB over here. So it nearly touched the 50%. Not all the time price should touch the 50% of the OB. It depends on certain situations. We're just following the footsteps of the composite man. So we can have this Wyckoff over here, basic structure, buying climax, UT, then continue to the downside. As you can see, we see a break of structure over here. Then we can look for entries at this innermost part of the zone. This OB over here in the 5-minute. As you can see, it tapped in beautifully. We're just riding on the retest of that break of structure. Then we can target either Right now, since we are planning just to ride the retracement, we can either target an open of the OB, or yes, my bad, we just need to target the open of the OB since we're expecting a bullish move to the upside, or a bullish move continuation to the upside. Because if we target these lows or lows over here, then we're expecting price to shift its order flow to continue to the downside. Because if it doesn't break these lows, then we're expecting a push to the upside since we're protecting the previous lower high. Then if price breaks it, then it's possibly a liquidity grab or a possible shift of the order flow, just like this. New lower low, lower high, lower low, continue to the downside. And again, 43 to 1, I'm not sure. 43 RR, I'm not sure if this will hold, but again, it's the same thing. EURUSD, GBPUSD, and GBPJPY. Now let's look on commodities. XAUUSD, the same thing again, structure, POI, and confirmation. Now what do we see structure doing? Let's just draw this out. Either we can start from here. Let's just start from, it's on different time frames. Let's just look on the larger time frame. So we're expecting this on the larger time frame. On the inner time frames or smaller time frames, we're seeing some wild push or some wild structures over here. But either way, we must always follow the larger time frame because it's the most it's the lead of the story. Again, if you haven't watched my other market structure video, showing us that the larger time frame, basically market structure is just a way for you to make a story on why price is pushing to the downside. So again, we're expecting price to continue to the downside because it's been breaking these structural points over here. Now we're expecting another structural point to be broken again, basically grabbing this liquidity low over here. So as you can see, we have structure. Now we look for POI. Either two ways could happen. Two ways you could do. Either you wait for price to break, then you enter on any retest. We just look for a POI over here, just like that. Or you can trade intraday or some scalping techniques on the inner time frame. Again, since we're expecting price to go on a bearish trend to grab this liquidity low over here, what we could do is go on the lower time frames, or just stick to this time frame and just draw out the more clearer or the lower structure. You can see price has been moving to the upside. As you can see, we're seeing a structural shift over here at the same time that it breaks structure. So on other time frames, this is still a bearish trend since it didn't break the structural point over here. So we're expecting a move bearish down, possibly to continue to grab this liquidity low over here, since we're still in an overall bearish trend. But specifically on this time frame, we're moving to a bullish trend. We're seeing break of structure over here and another break of structure over here. Again, we can ask ourselves, why is price on a lower time frames doing a bullish trend on a bearish trend market? It's possibly on the lower time frames it's forming a bullish trend because it wants to mitigate some of the order blocks over here on this larger time frame market structure, then to continue to the downside. Because again, let me just draw this up. This example, this is the larger time frame move, this blue line over here. Oops, I messed up. Blue line over here, expecting push to the downside. Now the inner structure saying, let me just remove some drawings. Now the inner structure is saying forming a bullish move to the upside. Why is it forming a bullish move to the upside? It's probably wanting to mitigate the higher time frame, or wants to fulfill the higher time frame market structure. What is the higher market time frame? The next higher time frame market structure, we're seeing a bearish trend. As you can see, lower high, lower low, lower high, lower low. We're expecting a lower high, then continue to the downside, a lower low. That's why price is on the inner time frame. It's forming a bullish trend to the upside because it wants to fulfill, or to, it's basically the retracement of this blue structure over here, this orange structure. So what you can do is wait for a break of structure on this point over here to ride on. So let's say we're on the orange or the lower time frame break of structure, then we can look for a order block over here to enter the order block over there. Then you can get more refined entries by going on lower time frames and looking for wyckoff or just break of structure. Because again, if price breaks the structural point or this inner structural point over here, this lower high, this higher low, then this orange this orange, what do you call this, this orange structure, the orange line I drew, is now shifting, since we're in a bullish trend, shifting to a bearish trend following this overall blue structure line. So again, it's the same thing again and again, from EU to GU to GJ to XAU to gold. Look for structure, look for a POI, then we look for confirmation. So the main point of this video is there is no best FX pair to trade on, or a commodity or indice or whatever. There's no best pair. What you can do is backtest, find a pair which works for you, which works for your strategies. That's why I trade EU, because EU has low spread and I usually scalp. Back then I scalped, then EU is helping me with lower spread, meaning it's better for scalping. That's why I fit, or I like EU. And again, EU also has a very clean chart for me personally. So that's why I choose EU, and I only trade EU because it fits me, it fits my strategy. And again, this is why you should backtest, forward test, find any pair that fits your strategy or fits your personality. And again, there's nothing wrong. You can trade multiple pairs. It's up to you. Either you trade multiple pairs or just stick to one pair. So thank you for watching. And again, there's no greater pair from the other. It really depends on your strategy, or it depends which pair you are more connected to. So thanks for watching.